Hi everybody, great to have you back. My name's John Sinclair and my co-host Mark Padavestra.
Hi John. Today we're going to talk about the budget time of year for OEMs and dealers, working not on a financial year but on a calendar year, 2022. And we talk about all the key drivers that we see that are going to impact the auto business, whether it be new cars, used cars, service and parts. We've got some ideas and reasons why we think the number will be the number that we talk about in this podcast. We would love for you to tell us what you think the number is going to be for 2022 and why, and where you see used car prices going and where you see the demand for new cars and the new technologies that are coming, whether it be EVs, car subscription, or the model of selling cars through agency.
Yeah, Mark, it's such an important time to sit back and do assessment and understand what is going to happen this next year and plan for that, because there's so many factors that are impacting the market at the moment. It's good to just do that assessment, get a clear view of what you think is going to happen, and then put your peg in the sand to make sure that you are very aware of the risks associated with that volume going forward into next year.
Let's get into it.
With 30 years' experience in auto logistics and state-of-the-art locations in 5 major Australian cities, Precar Fleet Services is an independent division of Precar Services, offering specialty fleet fit-outs for commercial applications ranging from simple tray and tow bar fitments to fully bespoke service body and accessory installation. With quality-assured safety, compliance and standardisation of vehicle builds, Precar Fleet Services are a premier all-in-one solutions provider for commercial vehicle fleet operators, leasing companies, and original equipment manufacturers. For further information on how Precar Fleet Services can assist in solving your commercial vehicle fit-out needs, please visit precar.com.au and click on the link to Fleet Services.
Maybe just to start off with, can you give us what do you think are the elements that are going to have the biggest impact on the market this coming year and the volume for the market?
Well, this is the golden question, John, because right now we're seeing for the first time in as many months as far as this year is concerned, some movement in the exchange rate. Last year saw some wild swings in exchange rate, but it settled at that mid 70 US dollar price point for the Australian dollar and around that 65 euro. In the last 2 months, with the uncertainty around the recovery and the potential longer lockdowns in Sydney and the slowing of the Australian economy, not as buoyant as it was in Q1 and Q2 of this year, what we're starting to see is the Australian dollar weaken. So that dollar is now pushing down towards the 73, 72 US cents, and the euro is pushing down towards 60 cents and potentially lower. Most people in this country don't look at exchange rate unless they're travelling overseas, so most people are very much oblivious to it. But the exchange rate is a significant bogey given that every car in this country is imported. Now, we've had higher prices because of demand and supply, pushing prices up, and there's been very little discounting from OEMs and very little discounting from dealers. So there's been good margins because there's been good demand. But with a potentially softening economy going forward, the never-ending bullish feelings that we've all had for the last 8 months may, in fact, dissipate next year. And what may even be more of a concern is if the Reserve Bank starts lifting interest rates. Now, moving rates up will help the currency, but the concern is that if you have a US economy and global European economies coming out of COVID and rebounding strongly with low interest rates and strong economies, they are more likely to move rates up earlier, which will make their currency stronger. And that will then is bad news for Australian importers and ultimately customers. Because even though we won't be traveling overseas, we're still buying overseas products, and those products will start to continue to go up.
Yeah, Mark, I think the big factor too that you have to take into account is inflation. You're seeing inflation now, they're saying I think it's sitting over 5% in the US, and even our inflation in Australia is going over the 3%. And many of our banks borrow money from the US market. So if that inflation goes, the central bank is going to push the interest rates. So that's going to have impact, and it's going to impact the disposable income in the Australian market, because I think we, at the moment, got some of the highest housing debt, and that's going to really impact our spending in it. I think there's been a lot of commentary around that saying that inflation will jump back because it's a temporary inflation due to some of the spending was cut back due to COVID, and it's just realigning and things are coming back into line. Local Reserve Bank is saying they're targeting that 2 to 3%, but you never know exactly what can happen. If it was a perfect science, I think we'd all be rich men now, but it's not. So I think it's going to be interesting to see what happens as a result of that.
There'll be many OEMs that'll be looking at the exchange rate with concern right now. And that's where, from a volume budget perspective, the local OEMs will be concerned about exchange rate. But what you will see in reverse is that the other economies will kick in, they'll have an expectation, they'll ramp up, they'll catch up with production around the semiconductor issue, capacity will return, and the push potentially will start to come in the second half of next year. First half, I still see it being fairly positive, but it will all come down to what does that exchange rate move to. Because if we are the laggard with vaccination, if we are the laggard with continuing to lock down A, our cities, and B, our country from an immigration perspective, we then will have challenges around having demand and domestic demand continuing in the longer term. So there may be some tempering from an overall volume perspective, getting back to the mid-million and 50 type range from a new car volume. But that will also then depend on what happens from how many cars come in to supply.
What's your feeling on that, Mark? Do you think we're going to continue with lockdowns, or do you think we'll get the vaccination to a level that we can open up the economy and get back to some sense of normality? What's your feeling on that?
What I see is the vaccinations in this country will still continue to be slow. It is ramping up because there is a realisation that, we have to do this. The reluctance, sadly, we've done a bad job in making vaccination attractive and sexy and attainable. So a lot of people have been reluctant to get vaccinated because there hasn't been a need. Suddenly there is a need because the realisation is if you don't do it, we'll lock down and we'll continue to lock down, and that hurts us economically. We cannot afford to continue these lockdowns, which is why there's now a push and a move to living with COVID as opposed to this zero case mentality that many of our states still have, because that's unrealistic. Going forward, we know we're going to have to live with this. So it's a matter of how we can continue to trade, but also travel, but not have a significantly compromised healthcare system or significantly compromised health situations amongst people. But getting back to being part of the global community and trading, travelling, and getting a degree of normality, which will never be the same as what it was, is the key. But I can't see that happening until Q3, Q4 next year in any great volumes. And we know when people start spending money on those overseas holidays, they don't spend money on cars. So that's another impact, dropping demand in Q3 and Q4 in 2022 that you need to factor in your volume planning. It's an interesting one because it's only when you have this kind of conversation that the dots start joining and you realise that the vaccinations are actually going to work against what we've actually had in the status quo, because as soon as overseas travel starts, demand will drop because there's only so much money to go around, and that money will now start to go out of the country again like it had been doing in the lead up to 2020. The $20,000 average overseas holiday for a family will return. That means that they won't be updating their car to the level that they have been.
How do you think people will be changing their cars again? What impact do you think it's going to have on the car volume? So you've said the overseas holidays, so that's going to have one impact. So if that picks up, they're not going to do it. But do you think there'll be still people moving away from public transport and those type of things? Or do you think we'll go back to some sort of normality? Well,
that's the other thing that's happened. If you look at what the pendulum never swings and stops in the middle. The pendulum always swings on the one way and the thing swings back the other. So what we saw pre-COVID, this pendulum was over here in the rideshare world, it was in the subscription world, and it was in the public transport Uber world. I don't need a car. It interferes with my life. I'd rather use shared transport to get me around. COVID comes in and the pendulum swings extremely back over this way. I need a car because I need to have a car for myself and I need it for my mobility. And therefore, and we saw that in the data. 19.8 million cars on the road in 2019. In COVID, it tips over 20 million cars. So we actually then have more cars on the road. So we've retained cars on the road. We put 900,000 cars onto the road, but we took off only 600,000. So there was a net increase in the amount of cars on the road. Do we need that many cars when people swing back to public transport? Because the roads haven't improved in that time frame. No new roads have been built of any significance that's going to accommodate that net increase in 300,000 cars. And no, those 300,000 cars weren't all in rural areas where there's lots of space. These are the challenges with more cars, more frustration, lockdown cease, more traffic on road, can't move around, I'm now vaccinated, I'm now going to use public transport again, or I'm going to start using Ubers and maybe get rid of this car. So you're going to get a couple of things happening here. You're going to get used cars that were older because people retain them for longer, so the quality of those used cars is not going to be good. So the prices potentially for used cars will start to drop, go the other way, they'll start dropping because they're not as good as what they would have normally have been. And there's now going to be an increase in supply as people defleet those cars. Those that buy new ones will be great, but there won't be as much demand for those older clunkers because those people will be going and say, well, I don't need a car, I'm going to go back to public transport and Uber.
You've got people going back to public transport, so they're going to sell off the car, so it's going to drive price down a bit. Do you think we'll then create an instance where people keep their cars longer, or what's your feeling about that?
Well, COVID has taught us that you need to have a car if you want to have that isolation. And we've turned into a very isolated community. Something that Australia has done very well is to isolate our people through this COVID environment. Therefore, you isolate yourselves in cars. There was a reason why we moved away from cars in that lead up to COVID. The ride share, the cultural shift, being stuck now in a car in traffic for prolonged periods of time, once all the lockdowns cease and vaccinations are up. So we're not talking this year, we're talking halfway through 2022. There will be a swing away. It'll be right, I only don't need this car. It's sitting there, it's not being driven. I'm paying insurance, I'm paying registration. I'm maybe even paying to park it. Why am I keeping this thing? Let's defleet it. And then others those that jumped on to buy a car that didn't have a car previously will go back to what their lifestyle was and say, well, I bought this car, but I'm not really using it that much anymore. So it's okay now to get back on public transport. It is okay to get into an Uber. And it is okay for me to live my life the way I lived it before because we're not getting locked down all the time and I can get around easily and I'm not going to fear for my life.
Now, Mark, I think the big assumption we're making there, we're just making the assumption that people will go back, and if they don't want their car, they're going to sell their car. The thing what we still need to get to grips with is new cars and the availability of new cars and whether we can replace the older cars or not. Because if we can't replace your old car with a new car, for those that are going to upgrade or need to replace their cars because they've been damaged in an accident or something's happened or it's actually got too old that you can't drive it on the road anymore, there's still a lot of factors impacting new cars. What's your view on that and where do you think that will go?
So as far as new cars are concerned, John, I see the volumes coming back to, as I said before, the 1,050,000 range because there was the pent-up demand that will be met this year and then there will be the plateauing. So it gets back to the average retention has been extended. And I dare say when we get the numbers halfway through next year, I wouldn't be surprised if it's out to 8 years from the 7.8. So the car's being retained for longer. Cars are getting more reliable. The need to change is a lifestyle change. So if you think of, we've now moved on, we've got used to COVID, we have vaccinations, it's business as usual in 18 months or in 12 months time from now, new car volumes will drop back to those 1,050,000 units.
And we've seen a shortage of cars in terms of production, Mark. There's been shortage due to the semiconductors. I've heard in Europe in some of the big car brands, that especially where they do large volumes of EVs, their EV volumes are down to 25% of what they normally would be. Do you see they can recover from that, or is there going to be a big difference in terms of volume for those type of vehicles?
It's interesting. The commitment from Europe to go EV is without question. And this is where the internal combustion vehicles, if you're a supplier from Europe, you have to just get on board on the EV train. And if you want to be a consumer of European product, you're going to have to get on the EV train. But there'll still be providers and manufacturers from other parts of the world that will still provide a non-EV vehicle because there's still opportunities for ICE. They are definitely reducing. We don't have our head in the sand to say that EV is not happening. It is definitely coming, and it is definitely going to be an evolution, not a revolution, but it will be an evolution. It will gain momentum in 6 to 7 years' time. We will have the early adopters that still jump on EVs, and they're the ones that are paying a premium. So production capacity, albeit will be constrained. If you have constraints and you're a supplier, you supply to those people who will pay the money. So you're not going to supply cars that make hardly any profit for you. You'll supply the higher end margin cars that will make profit and make your business viable. So that's where you'll see if there's constraints can continue with EV batteries and tech, it'll still be the high end that will be selling them. And that's why it'll still take that little bit longer until you get some cost-effective EVs out of the Asian region to get significant volumes. But in the meantime, it'll be the normal supply and demand. Semiconductors will catch up. Feeling is always that it's going to, whatever the current state is, it's going to last forever. It doesn't. And that's the reason for this discussion is, right, okay, you're budgeting for next year. What's the number that you're going to work to and why? And then what are the things you need to look out for from a supply, exchange rate, consumer demand, and buyer behaviour perspective?
Now, Mark, we've seen a lot of the volume increase coming out of the Asian markets for Australia. We've seen a lot of the Asian suppliers ramping up their volume and successfully getting volume into the Australian market, where the US and the European factories are still struggling. Because I know a big problem is getting ships, there's crews being sick and just getting ships to transport vehicles. Do you think that's a major problem? Do you think that will be a problem long term, or do you think they'll get over that quite quickly?
Shipping is a challenge, but as we know with anything that's longer term, as from a longer term view, the universe doesn't tolerate a vacuum. So if there's a shortage or a gap, it gets filled. Entrepreneurs will fill it. So shipping will improve. And this is where, once again, if you look at a monthly view, yes, it's going to be hard. But if you start to look at a yearly view, that will start turning around. Capacity will resume in those overseas plants. They're looking after their first markets, their initial markets first, and then the export markets. They will fill those markets this year, and those factories will then start to resume looking for capacity in other markets. And they'll look at Australia and say, well, you've fared quite well. We have now volume expectations of you to push more stock into. But while stock is short, prices will be high, but we know the pendulum does not stop in the middle. It swings from no stock to too much stock, back to no stock, then back to too much stock.
And do you think there's going to be long-term changes in buying habits or car ownership habits? Do you think we're going to see major changes in the market for that?
I think subscription will still continue on. Subscription is basically renting a car, a hybrid of renting and leasing. That will still continue to grow because it's an attractive solution not to have ownership of a specific car, and the understanding and adoption of that. And it really makes sense in the EV space. So EVs will push some of that alternative ownership structure until such time as they become mainstream. So when it's mainstream, the drivetrain won't be as scary as if it's something that is a new technology that I need to understand and behave differently around. But what are your thoughts on that, John? Because with EVs brings changes in distribution structure and channels. And we know the agency model's coming. So from your volume planning and budgeting perspective, how would you tackle those issues?
Yeah, Mark, I think you're right. I think there's going to be changes in subscription. I think it's something that's going to grow. We've seen that with mobile phones, all other types of technology. We recently interviewed Desmond from Carbar, and I see just last week they've raised another $50 million for the business. There's a lot of other people who also believe that car subscription is going to grow and it's going to become a bigger part of the market. I think convenience, people like convenience. Car subscription and variations of car subscription will become part of the future. I think are going to be different types of distribution models. You're going to start seeing the agency model, as we see more electric vehicles come into the market, the vehicle's going to start to become more commodity. 70% of batteries are made in China. Whether the vehicle's out of China or US or Europe, those cars are going to become similar, and it's going to be more difficult to differentiate the car from a vehicle manufacturer point of view. And as that happens, the vehicle will become a commodity, so it'll be a lot easier just to purchase the vehicle online, have it delivered to your house, and then you just drive the vehicle and have it serviced through some service network. Maybe not the traditional dealer network that we've always seen in the past. So I think from a dealer point of view, probably quite important to look at how you service your service vehicles and the back end of the business, and how you're going to take that into the long term. Because of the challenge of agency model coming in and vehicles starting to become more commodity, it's going to be very important for dealers to become more efficient in the way they do business and also build their own brand, so that in the future, if things start to change, customers will still come to them if they're no longer representing particular franchise brands.
No, it's interesting. It makes very good sense there, John, because next year we will see two brands potentially running with the agency model in this country. And that means that two brands will have lower volume push ambitions. And if history tells us anything from the South African experiment, or not experiment, but their business case, is that those brands go back in volume. So they actually sell less vehicles. So that agency model disrupting overall volumes, and that's 60,000 units if you look at those two brands together. So that's 60,000 units at not totally at risk, but 60,000 units that will potentially go backwards, on top of all the other things that are happening around catch up from the 2020 gap because of COVID initially dropping, but then the catch up mode that we're in. So once we've caught up this year, agency will further compound the overall volume numbers, and you'll see some numbers drop back. The agency model is a good way to absorb some of the FX challenges that we talked about, because it's taking cost out of the supply chain for those distributors so that they can weather the storm a bit better by having a few percent better margin up their sleeve.
But Mark, don't you think that agency model is going to open the door for other competitors to come in? Because now you bring in the agency model, customers are going to get used to the concept and the idea, and there's going to be service channels being set up to cover those agencies, because those manufacturers are no longer going to be controlling their dealers to the same extent as they would have done under a franchise model. So now you're going to open that up, and so you could see a lot more EV brands coming into the market, because it'll be a lot easier for them to come in and set up. They don't have the existing infrastructure or dealer network that they have to worry about. They can just come in very easy and set up from scratch, and it'll be easily accepted. What's your view on that?
Yeah, that's a very good point. Attractively priced direct sale vehicles that are commoditized fit the bill for a direct sale through an agency model. If it's a complex sale involving a high level of emotional engagement, then you need to have some human interaction, and that whole person-to-person education, trust, and you need to be comfortable in that situation is where the dealer model works very strongly. Commoditizing, where I really don't care, I'm going to throw the car away, but I'm aware that it's going to be exactly that. It's too good to be true to miss out on as a deal. It's all of my reasons not to buy mitigated by whatever system or process of trust that direct sale process provides. But I think when you start to get into a complex, higher end purchase, which is there's higher involvement emotionally and financially, you then need to have that link in with some sort of human being to get that, to convince you that that is the right decision that you're making. Because ultimately that's the reason why you go into a dealership anyway. That you trust the person and the organisation that you're buying from, and you trust the brand that you're buying. So new brands coming in without having that trust, without having the support, can be quite that's a challenge in itself. So there's a whole suite of work that has to be done to go, right, okay, I'm bringing in could be any brand that is unknown, has to establish the brand first, establish the value proposition, and establish the trust equation, and build that trust that, yes, you can buy from me and all of your concerns are gone or have been dealt with. And if you do have any, we will deal with them quickly. It's a greenfield opportunity. It's exciting when you think about it, if you can commercialize it well. But as we know, the devil's in the detail and the execution. So you've got to execute it exceptionally well, because you'll get one shot at it.
But don't you think those type of vehicles could appeal to, for instance, the rental market, or what we mentioned, subscription? Because they might just be looking at a formula and a calculation of what the monthly cost is. So if they can get a vehicle that's relatively cheap and they get some sort of buyback at the end of it, that could be quite interesting for those type of companies. What's your thought on that?
And that's where, once again, if it's a commodity, you commoditize it. There's no emotional investment in it. The risk has disappeared. So therefore, you've got trust, and it all comes down to trust. If I trust that I can get out of this, it's a 1-year relationship at best. If it goes for longer than that, and I've had a win, but what are my risks in engaging in this thing? I really don't care what it looks like. I don't care what it drives like. That may work. But if it's something that if it's an enthusiast vehicle, well, then you need to have a little bit more of an engagement and a process. Not to say they can't be sold as a direct sale, but there's a job to be done to give it credibility. And the brand story has to be a very compelling one. We're
starting to see the green shoots of government starting to get involved, and so that could start driving that whole EV demand in Australia. Do you think that's going to have significant impact, or do you think it's going to take some time before things get going on EV?
EV will still take some time. But if we're just looking at the 2022 budget number, what would I budget? I wouldn't budget for astronomical EV uptake. You might get to 2% or 3% of EV uptake by the end of the year, which I think is a huge win, by the way, if we're at 3% versus where we have been. But it will continue to build, and that's going to be the back end of the year. EV is coming. It's definitely coming. It's just a matter of how fast and when. Just like the vaccinations, there's a correlation in this country. It's incredible.
Mark, in terms of used cars, you mentioned that they should start tightening up. When exactly do you think, if the market's going to still be strong for the first 2 quarters, should they start tightening up their buying of used cars towards the end of this year, or do you think they can continue through to April, May before they start?
It'll be midway through next year. It'll be pretty much after the peak selling period of new cars next year, where you'll start to see the softening start to turn. As long as supply has been strong with the second half of this year and into H1 of next year. But after that's when you get a normalising of fleet purchases, where the leases that were extended last year have all been washed through and replaced. They won't be replacing any cars in any high quantities, because they would have held off and then replaced a big batch now, and then they go back to that normal situation again. So that's where used cars will be softer after midway through next year, but keep going for this year.
And then, Mark, you mentioned the parts side. What's your view? What are the 2 or 3 strategies you'll do from a parts and after sales perspective to keep that volume and drive that volume for next year?
Well, actually, John, I'll leave that one to you. What are your thoughts?
Well, Mark, there's probably a couple of things that they could do. Driving your customer database, making sure that you're really keeping that up to date and it's been filled in accurately, and measuring that. You should be measuring every month exactly what the accuracy of your customer database, and following that every person in the business is recording every customer that comes in, getting their details, getting it loaded in the database. So that's my first part. The second part is I'd really be looking at to see how I can manage and drive that database, just to see how do you improve that customer loyalty, how do you keep in contact with those customers and try and get that retention right. Delve into the detail to see what is actually impacting your retention and where are customers dropping off and for what reason are they dropping off. If you can determine those type of things and trying to make little improvements, that improves everything. And a 2% increase in retention, that all increases the value of your business, because if you have a really solid database and you can predict what sales that's going to generate for you next year and the following year, that's the value of your business. And if you're coming to sell the business and you can show someone that transparently, it takes you out of the argument of saying my business is some multiple, whether it's a 2.5 times multiple or 3.5 times multiple of return on sales. So it takes everything out, because you can show people that's how much business is going to bring in, that's the value of my business. And it also helps you predict how many service bays you're going to need, how many service technicians you're going to need, because that's the hardest thing at the moment. A lot of dealers I'm speaking to at the moment just can't find technicians. And I think that's really having a big impact on their business. They were bringing in technicians from the Philippines and places like that, and had technicians lined up, but because of COVID, they couldn't come. And a lot of them are actually don't want to do any marketing in the after-sales business because they just don't have the technicians and that to complete the work. So it's having quite a big impact on their business. So I'll be having a look at the planning of my after-sales side, having a look at how can I get those technical skills in, and what sort of technical skills I'm going to need to meet my volume requirements.
Getting skilled staff's a challenge, because that's right, we can't bring in the low-cost labour from overseas, and we're seeing that with the skills shortage for sure. There's a challenge, and there's a podcast in itself, I think, John. We need to talk to the training institutions for our tradespeople. We need more technicians. We need more panel beaters. We need people who work metalwork. We need welders. We need fabricators. When we looked at the aftermarket, there's a huge industry in making accessories. So we don't want to outsource that. And what we're seeing is there's a swing back to local manufacturing for a lot of those components. The aftermarket business is a huge contributor to the Australian economy. So we need to get those skilled operatives, A, developed, and B, retained in the industry. So it's one thing to train them. We don't want to lose them after we spend 1 or 2 years at least investing in their education and skill sets, only to have them leave to go work in not office jobs, but even potentially hospitality and other roles. These are skills that we definitely need.
Yeah, Mark, I think you make a good point there, because that's a big challenge, is do we continue to pay them, and as we have always done in the past, do we need to relook at the structure of their packages, their working hours? And it's maybe something we need to change as an industry. I don't know. I don't know what the answers are. So it could be as you say, interesting debate. I think we need to get someone who's specialist in this area to maybe talk about some of those things and how we can improve it.
You're right. It's if the industry is not sexy, if the industry doesn't reward you, and you look down the road and you're a 19 or a 20-year-old apprentice mechanic, and your friend who's a 19 or 20-year-old apprentice builder, plumber or electrician is driving a new Wildtrak with all the accessories that you're putting on the car for them. They've got the new vehicle, it's theirs. You're driving around in the old clunker because you can't afford to put fuel in it, but you're spending all your time maintaining it so it can still keep going. And you're looking with envy and say, well, maybe I should just go dig holes and pour concrete, because that seems to be more rewarding than having to learn all this technology, potentially getting electrocuted, touching the wrong thing on this EV, and no one saying thank you.
So Mark, if you now a dealer planning his budget or OEM planning his budget for this next year, what are the 3 or 4 things that you should take into account as a summary for that budget?
Definitely from an OEM perspective, it's the exchange rate's the bogeyman in the room. So where is that exchange rate going to move to? Because that's going to ultimately really drive your profitability and sustainability, and where you can move your prices. And then where your competitors source their product from and what currency they've got. Because if I'm heavily linked into the US or Euro, I'm going to have some challenges versus the yen or the won. So that's going to be a concern for me if I'm in the OEM space. If I'm a dealer, I'm going to be very mindful of what pressures are on my OEMs, because if they are under volume pressure, then they're going to start putting pressure on me, and then I know that my margins are going to start being eroded. If they're very tight from a supply perspective, then I know that I'll be in a good shape for next year. If they've got good new model rollouts, so there's a story to be told, there's a reason to tell people about my business, that's going to be a bullish thing too. And I know my used car business is going to be strong for at least the first half of next year, at least. But I should be expecting some softening towards the second half as supply catches up, and then the change in driver behaviour for used vehicles. But used cars will still be good news all the way through to midway through next year. But just to be mindful that it will tighten up, and I just need to revalue my cars. It doesn't mean I'm going to stop selling used cars. It just means I need to be mindful of my valuations and what I'm buying, because the cars I'm going to be buying aren't going to be as good as the cars I used to buy 2 or 3 years ago, because they're going to be older, they're going to be in slightly worse condition. I would have paid a lot of money for them, but I just need to make sure I move that inventory and I don't get stuck with it as the market starts to go out. So they're the key factors there, and I'd want to make sure that I'm very close to my after-sale side of things so I can really engage with those customers, because they're maintaining their cars, or they may be not maintaining their cars, and they should be, and that's a profit opportunity. It's an interesting topic, because if you're looking at, because this is a budget for next year, and I think the challenge is we talked about stuff that's 3 or 4 years away, but it's like, okay, yeah, but that's the longer term. But so for next year, what's going to happen? So if you're budgeting for next year, what's the issue for next year? So EVs are coming, but how much next year? How much the year after? And I think that's one of the challenges. And I think it's ironic. When COVID hit back in March, April, May last year, all the commercial TV stations in this country would have a real estate prediction of a 20% collapse. The real estate market's just going to collapse. We're all going to go broke, and interest rates are going to be super expensive. Everyone's going to lose their job, and there's going to be this massive plunge in real estate values. Well, it's funny, you just don't see any of those economists anywhere. You don't hear boo, because I'm not sure whether the market has said, well, hang on, you predicted -20, but we've got +20. What's the number for next year from an automotive perspective? I think we're fairly conservative, but I think we will be close to the money.
Now, Mark, I think you make a good point there, because when you make a prediction, you make a prediction on the evidence you have at that time. And I think the economists were making that prediction, but then the government support for the economy was huge. And a lot of people did very well out of this whole COVID shutdown. There were people who really struggled, but there were a lot of businesses that made lots of profits. So it was a two-tier economy. I think the reason it survived, and especially automotive, I think automotive did extremely well out of that, because there were certain things that just weren't expected. Didn't realize the impact of having everybody not being able to travel overseas, and then being based in Australia and having that extra disposable income available to spend on cars.
But John, we called it. John, we did. We called it in episode 2. This is what will happen. No overseas holidays. You will spend money here. And we called that the accessory market was going to be fantastic. And once domestic flights start, the rental market would kick in. And we called it that you couldn't get a rent-a-car in Tasmania when we had the Steve Shaw discussion. And now, for the very reasons we've just explained, why Q3 and 4 next year will be a bit tricky for the auto business, is exactly those reasons, because those issues, those drivers actually going to kick in the other way. So money's going to start leaving the country. We've bought our cars. The rifle has been shot. We don't need to buy another car for another 3-5 years. So we've spent our money, and we're now going back overseas because we can't wait to get back overseas. And that's where the money's going to go. And then we're going to bring in cheaper labour. We're going to get fruit pickers back again. And we'll then bring in cheap labour for technicians who hopefully would have been EV trained by then, so they can work on the EVs that are going to start to come in as of Q3, Q4 next year. It is going to happen, and the pendulum never stops in the middle. Thank you for listening. We're keen to get your thoughts on where you see 2022 going. Is it going to be business as usual, or is it going to be a swing back the other way like we're predicting, albeit in the second half of the year? Let's see who is nearest the pin from an estimation. We'd love to hear your number. If you like what you heard today, please follow us on LinkedIn, or like us on LinkedIn, follow us on YouTube, subscribe to our channel here, and subscribe to our LinkedIn channel. Listen to us on Spotify, on iTunes, and also please visit our website at autocurrents.com.
Thanks very much for listening. We'll talk to you again next week.